Hey guys, what's going on? It's Russell. If you're new to the channel, make sure you subscribe. I do tons of different service reviews like option services, day trading services, long-term stock pick ones, and alternative investment stuff a little bit like the one I'm about to do today. So let's get started on the Palm Beach letter review by Teeka Tiwari. My friend Mark actually bought this newsletter last year and reviewed it for us, so I thought I'd go through some of the findings. I'll leave a link in the description below for you to go and read this report that he did. So let me just find the start of it here. The Palm Beach letter. So yeah, it's a company called the Palm Beach Research Group. It's well known. It's one of the most well known financial newsletters in the world. It was founded in 2011 by Tom Dyson and Mark Ford. So it's based out of Palm Beach, obviously, where there's a lot of millionaires and a lot of trading and financial services come out of that area as well. So the company offers several different services. The Palm Beach letter that I'm going to be talking about today is $199 per year. Occasionally you can find it for $49 for the first year, which is a similar pricing to pretty much all the other similar services that I've seen or reviewed, like the Near Future Report by Jeff Brown. These types of things, are so many of them, all cost $49 or $100 a year that you can find and try out. And the Palm Beach letter is very similar. It's also similar in the way that it's the entry-level newsletter to the rest of their services. So you can see here all their different services. It starts at $199 per year for the Palm Beach letter, and then it goes up to thousands of dollars per year for their other more specialized services. I'm mainly going to talk about the Palm Beach letter today, but I'll also touch on some of these other ones just because there's a couple of things that concern me a little bit going forward with them. So the Palm Beach letter is one of those 9 services. They're all authored by Teeka Tiwari, who's the editor. At the time of writing this, Mark said he bought this for $49 for a 60-day money-back guarantee, which is pretty cool. Like I said, you can come and check it out here. I'm not affiliated in any way with this company. There's an order link here that you can go and check out. So he said that the pros of the Palm Beach letter is that it's easily accessible, it's very provocative, and that it's very attention grabbing. And again, I keep coming back to this theme that all these lower cost investment newsletters are all very provocative, very FOMO based marketing, where you feel like you just need to get in on the ground floor of this next big cryptocurrency or whatever, and you'll end up multiplying your money by 1,000,000 or whatever. So not surprising, these are well professionally done, they're well marketed. Palm Beach letter is no different. There's a ton of special reports, and always these special reports have crazy names, they're really supposed to draw you in, and there's 73 of them, so if you like that type of reading, sometimes I do, then this would be a letter that you might want to consider buying. With all these things, I always kind of think of them as entertainment and interesting knowledge building, rather than I'm going to throw my life savings into something that Teeka Tiwari says is going to be the next Apple or Amazon or whatever. The cons that Mark pointed out is that the portfolio is huge. It's just a stew of 34 stocks in 9 asset classes, which can be confusing. I kind of like it though. I'll show you why, but it kind of introduced me or reminded me about some asset classes that maybe I've ignored and might be something I want to look into a bit more. There is a lot of negative publicity that surrounds the Palm Beach Research Group. Part of that is, as you'll see, Teeka has a bit of a checkered past, and part of it is the absurd, crazy, over-the-top marketing that these guys engage in. Nevertheless, I think for this kind of cost, getting some really, really deep insight into some of these asset classes and potential investments it's pretty good. I mean, just don't go spending millions of dollars on these things, but for $49 or even $100 or $2 a year, probably worth it just for the pure educational, part of things. Okay, so what do you get? You get a monthly issue of the Palm Beach letter. It's published every first Thursday of each month. The issues focus on blockchain stuff, which is cool, cryptocurrency, precious metals, and these other alternative investments. The special reports, like Mark mentioned, there's 73 of them. They update all their portfolio holdings that you can see, so you can see what they're holding, when they bought it, where they bought it at, what the return is, all that kind of stuff. there's these guides that these companies all seem to throw in. So this one focuses on asset allocation guide, basically how to take on a ton of different things in your portfolio. So cryptocurrency features a lot in this because because of the growth of crypto over the last few years. That's been a key focus from what I've seen in their advertising, and also what Mark noticed in this review as well. So you pointed out the same thing I just said, that buying the Palm Beach letter should boost your understanding of investing. There's probably going to be some gold nuggets in there somewhere, right? Maybe you won't discover the next Amazon, but maybe you'll realize that maybe there's a way to invest in art that you never thought, or classic cars. Like you got to keep your mind open to these things, even if you think that there's some big scam or something, you know. I've lost count the number of times that I've bought something for $100 and it's changed my financial life in some way, significantly for the better usually. So you just never know. So Tom Dyson, Mark Ford, and Teeka are not respected by some people, that's true. I've seen a lot of negative stuff on them, and I'll go into that a little bit more and what I found. But the Palm Beach Letter is a big time player. It's well known. I'm sure you've seen their ads. You must have. They're everywhere. Like he says, you may not appreciate everything they do, but you probably owe it to yourself to at least consider their 60-day trial offer. I kind of agree. So Teeka, a little bit more about him. This is when things start to get a little interesting. And this is all information I've verified online. Whether it's 100% true, I can't say. I'm just going with what's already published out there on the good old internet. So he is the editor, Teeka Tiwari, and he grew up in the foster care system in the UK and came to the States at the age of 16 with just $150 in his pocket. Impossible to verify this story. I'm going to go with it because that's what it seems to be the going story. So by the age of 18, he'd become the youngest employee at Lehman Brothers, and of course, you guys probably know all about them and the subprime mortgage stuff and all the crazy things that went on there. That's enough said about that. So, in 1998, he made a small fortune, going short during the Asian crisis. He got greedy, lost it all, filed for bankruptcy, and then built himself back up via the stock market, and went on to launch a successful hedge fund. So he's retired, and I'm going to talk a little bit about that in a minute. From the hedge fund business, he is a regular contributor on all these major networks. Gives him some credibility, but does it? Up for debate, right? What is the financial philosophy of the Palm Beach Letter? Alright, so before I launch into that, I want to say a little bit more about Teeka Tiwari. I'm not normally one that starts wondering about people's pasts or whether they're potentially committed any heinous acts of any sort, but there was something that I couldn't ignore with Teeka Tiwari that you guys have to know about. So this is an article on tradingschools.org. Not a huge fan of the site because it tends to be overly negative on a lot of investment gurus and things. Often without doing background checks, it'll just, this guy doesn't seem to really test the services. He just seems to go after the people behind them. And so somebody like Teeka, who does seem to have a verifiable shady background, are, fair game to this guy. So this is what I found on here. I also verified it independently that it is indeed true. That the FINRA registered investment companies that he was working for, he got barred from becoming any sort of broker, here we go, or associating with a broker-dealer firm. So if this is the same guy, and I have no reason to believe that it's not, I looked this up as well, that Teeka Chand Richard Tiwari has been banned from acting as a broker or otherwise associating with a broker-dealer firm. Now you can argue maybe there's a real, maybe there's two sides to that story, we don't know, but it's worth bearing, in the back of your mind that this guy may have been banned for a good reason. But again, we're not really sure why. FINRA barred, FINRA. So this is the research and due diligence that Emmett Moore did on this guy. He's usually pretty good at picking apart these people who have records. So this is all the stuff that he has to say. So he talks about private placement stuff, which I'll also mention a little bit. But anyway, so there's that. There's the idea that Teeka seems to have a checkered past when it comes to FINRA. The Yale model stuff is interesting. It's really just about diversifying your portfolio into all these different asset classes. So here's an example. So venture capital stuff you should be in according to these guys, or according to the Yale model. Absolute return investments, real estate, bonds and cash, leveraged buyouts, foreign equity. So that's what this newsletter is based on, is trying this Yale endowment asset allocation model, which is pretty cool. It basically just means you're going to have a lot of stuff and lots of different things to manage. So I do like their stop loss idea. So your maximum loss on any particular investment should equate to no more than 2.5 to 5% of your portfolio value. So pretty sensible. So here we get into the meat of this review a little bit. It's what the stocks are that the Palm Beach letter was holding and how are they performing. Now bear in mind this is a year out of date now, but it gives you kind of an overview of what actually these guys do. So I'm not going to give away individual stocks or equities or whatever, but they split it into these 9 different categories. So first of all is the equities, which is the core of the portfolio. It was doing really well when Mark looked at it. He said 9 of the 10 stocks in this portfolio have positive gains with 113%, and one of the stocks, the only losing one, is only 7% down. So that's amazing. If you were just trading the equities or buying the equities in this letter, you'd actually be up really nicely and be singing this guy's praise from the rooftops. The fixed income stuff like CDs and money market funds and stuff, not really much information apparently on those. Rates of returns aren't calculated, but we all know kind of what you'd expect from that sort of sector. Real estate, investing in 2 companies. Private markets, currently holding 1 stock, not trading in a public exchange. I'm going to come back to that in a little bit, just because there's definitely some comments I have on private placement and private markets in general with this company. Crypto is a huge part of their business. They advertise a ton of crypto stuff. They seem to have done amazingly well in the crypto space. Mid-September last year, they had 6 of 10 stocks in the portfolio that were to do with cryptocurrency. 4,000%, 2,000, 3,000% winners. Pretty amazing. So 4 of the 10 stocks are currently red at the time, 3 of them being minus 277%. But overall, that crypto performance is amazing, and if subscribers were able to replicate that, and have no indication to tell whether they were or they weren't, then they'd also be extremely happy if they were able to duplicate that result. Precious metals, these guys also invest in precious metals. Positive gains, 94%, pretty good. Collectibles, something that I'm becoming more interested in, maybe from an NFT type of point of view, but they are currently invested in a platform that allows you to buy and sell fractional shares of classic cars. Kind of interesting. So equity speculative, that's just like total moonshots. So apparently it's doing horrendously, which, given that it's a lotto basically, you wouldn't be too surprising. So overall, Mark's opinion of the portfolio is that it's really difficult to judge. So 6 of the 9 investment sectors are doing poorly at the time of writing. So 6 of 9 it's not great, right? It's not good. 3 can't be evaluated because no rate of return is provided. 1 is an unmitigated disaster. Doesn't sound great. Another 2 have only positive returns, modest ones, so 13% and 10%. The difficulty then becomes this idea that the 2 sectors, and this is what I've seen with trading and all these things, venture capital, everything, is that these 2 sectors, crypto and equities, are achieving very, very large positive returns that probably outweigh all the negative stuff, right? So you've got that problem, is that if you didn't buy into all these portfolios, the crypto and the equities, then you may be at a huge net loss. But if you did buy into just the cryptos and the equities, you're going to be up amazingly well. So how do you judge? Because it's going to be so varied, and it really depends on what you're interested in. Now, my hope is that because they've been driving the advertising stuff to the crypto a ton, that they would actually be, like, all the people joining this newsletter would be in the crypto and equities portions of it and be really happy. That'd be great. But I don't know if that's true or not. So before I finish, I just want to say a little bit about the private placement stuff. So if you guys are not that familiar with private placement deals, they're basically where a private company comes to you, usually at a very early stage, and says, hey, We're going to sell you some note or portion of the company for a bit of capital. So $10,000, $50,000, $100,000 is usually the order that we're talking about, not normally millions of dollars. But they'll often get them from like a bunch of different people, so they'll get 200 people all given $15,000, $20,000. The problem becomes it's hard to regulate that industry, and it's none of the usual people that you're used to dealing with, like the SEC or FINRA, have anything to do with private placement deals. They just laugh you out of the place and say, well, you took the risk, it's not a regulated public market. And that makes me a little wary, because Emmett mentions in his stuff that the same thing, that private placement deals is basically where people are getting funneled. So he claims that people are getting funneled from the Palm Beach letter at $99 a year or whatever into these higher cost services like the ones I showed you up here. So these other services, he's claiming that people are getting funneled into those and then pitched private placement deals, which may or may not be controlled by insiders or people that, you know, Palm Beach guys do deals with or whatever. Purely speculation. I have no idea whether they do anything untoward. Probably don't. But he claims that they might. And it is a worry, right? It's a real worry. Now, the company may take precautions to avoid any accusations like this. Mark didn't comment on it at all because he didn't really join any of these other services. My opinion is be extremely wary of these services that upsell you, especially with somebody who seems to have a bit of a shady past, like Teeka Tiwari. In my opinion, the best thing to do is not give these guys any money in terms of private placement deals. That seems really not a good idea. I've had some previous experiences with private placement investors. Not a good place to be. Often works out horribly for everybody involved. So my overall conclusion with the Palm Beach letter is, if you're interested in getting all this due diligence and portfolio information and learning a bit more about investing in general, it could well be a really good buy at $50 or $100 or even $200 a year. You really aren't going to miss that money. You get a lot of really cool ideas, a little bit of entertainment and education. Could be fun. What I don't think I'll be doing, in fact I know I won't be, is putting any money into the more expensive services, especially if they involve private placement deals. Anyway, I hope that was helpful, and I'll catch up with you guys in the next video. Cheers.